continue the conversation about what we learned these busy 4 days with Dryden Pence, Chief Investment Officer at Pence Capital Management. Dryden, welcome back to the program. Everything from invasion to some crazy earnings reactions again. 20% up and down, commonplace in this market now for just about any company reporting. What's going on and what do we do about it? Because we're only in month 2 of 2022.
Well, Oliver, thank you for having me back on. But I think the key issue here is, 72 hours ago, we didn't have a war in Europe. And I think that added a fact has certainly added some concern to the market. You had markets that were already down, but then all of a sudden you have this exogenous event and you have a war, and that's important. And I think that it created a tremendous amount of volatility around the big question, really, of oil. Right? Is oil going to be a weapon in this conflict between Russia and Ukraine? And at this point, it's not. And people have kind of said, we're not making oil the weapon system here. And that's important because I think that then began to kind of take some risk out of the markets or fear out of the markets that this was going to have a contagion effect that was going to really spill over and cause some massive problems. So from the commodity standpoint and peaking oil prices, oil prices north of about 125, then become a problem for the United States. But war is a supply chain disruptor. And so I think you've got two things going on here. You've got added inflation factors that are going to concern people, but also the other part to this is that oil is doing part of the Fed's job for it, because the Fed wants to raise interest rates to slow down the economy. Well, if everybody's money is going to higher gasoline prices, that's doing, in effect, the same thing a higher interest rate would do. Mm-hmm. So you can see the fact that if more money is going into oil or gasoline than into people's pockets, it's doing part of the Fed's problem, so that kind of takes them off of it a little bit. If you think about the war in and of itself, and that's the other thing I want to talk about, is it's inflation, it's interest rates, but it's also tanks and mud.
Yeah.
And this is really, really important. The weather in the Ukraine is warmer now. You're beginning to see the frost melt. That means tanks that used to go against really hard packed ground, they now start sinking in the mud. He had a very small window in which he could attack. Right after the Olympics and before things began to thaw. Mm-hmm. Well, now you're seeing the weather in the Ukraine thaw. You're seeing these large T-80 tanks that weigh 42 tons. And, the advance of the Russian army is a little slower, I think, than they expected. And so weather's important, and it's all going to be a factor of how aggressive the Ukrainians are going to be in fighting back. Yeah. And that's going to be a big I know that's a very long set of comments here.
Well, hey, I think
that's important.
I got a good movie recommendation for you, Dryden. Go check out The King with Timothée Chalamet. There's a whole bunch of stuff there about war in the mud that you're going to like. So, hey, I'll whatever it takes, basically, at this point. Dryden, you made a really interesting point, which is about the market or something that happened in the violence, the progression of this situation, that crude oil was not used as the weapon. You said that it doesn't look like crude's going to be used as the weapon. That's a really good framing. I like that. What tells you that? Are you just going by the price here, that it faded back down, or is there some other news flow that we need to be aware of?
Well, I think everybody made it clear very early that you weren't going to see, if we're going to do sanctions on Russia, we weren't going to do sanctions that affected the flow of oil. Russia needs to sell oil just as badly as Europe needs to buy it. And so the question became, are we going to stop buying oil? Are they going to have to sell everything to China? How's that going to work? And so I think what's happened is everybody's kind of said, let's not use oil as a weapon. Let's let that continue. At least at this point, it's not part of the weapon system and the arsenal that people are having. So I think that's taken a lot of the risk of this war, of how it's going to affect the global economy off. So now it's, how does this affect Ukraine, of course, and it's a terrible tragedy in the human life there. But from an economic standpoint, Ukraine's a diverse economy. Mm-hmm. Russia is not. Russia is Saudi Arabia with bad winters. They've got one thing to sell, And if you really wanted to hurt Russia, you stop buying their oil and let the rest of the world increase their supply, which they could in certain areas. But I think, rather than get deep into those things, that the good news here, the one thing that I think was really worrying everybody was oil going to be used as a weapon?
Yeah.
So far, it has not been. It also looks like the Ukrainians are going to fight, and they're going to be able to slow down Putin, which may put him in a bit of a quagmire. And the point of the matter is again, it's mud. You get stuck in the mud. And
how do investors not get stuck in the mud, Dryden? What do you own during all this? Do you just buy a company that makes missiles or makes a toilet paper and simple goods?
I think from an investment standpoint, the sectors that we have to look at are certainly U.S.-based companies, because he invaded the Ukraine, not Utah. And so we think this is good, very good for the U.S. It's also reminding Europe that they're part of NATO. NATO is stronger now than it was 72 hours ago. Everybody recognizes that the alliances need to be to the United States. Russia's kind of taken itself out of being part of greater Europe now. It's attacked its largest other compatriot, right? So the important issue here for investors, I think you look at a couple of things. Oil's going to be elevated for a while, so oil and energy is probably a decent sector to be into, because folks are making a lot of money if oil is going to be around $90 or 70 to 100 is pretty profitable, right? The other sector to take a look at, financials. Interest rates are going to go up some. We don't think it's going to stop the Fed.
Okay.
So financials are good. But then I think U.S. companies, we're reminding the world that the United States is still the safest place for money. And you have, once again, war in Europe.
Yeah.
And so I think that money is going to move into the United States. So people should be U.S.-centric, because that's where the money is going to flow.
Dollars jamming. Greenback with a pretty nice move this week. Okay, John, thanks. Good conversation here. Appreciate you walking us through your views on things right now.
Absolutely. Happy to be here anytime.
All right. Have a great weekend. John Pence joins us from Pence Capital Management. When we come back, let's continue the conversation with the focus on inflation and the data. The economic surprise index up this week, so things went pretty well for the economy, all things considered. But does that mean that the Fed is on a locked-in course for rate hikes?
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in option